Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the precious metals seem to be having a bullish run. The gold prices hit record highs and silver prices are surging on the back of geopolitical uncertainty in West Asia. China's stimulus measures and the optimism over the likely rate cut by the US Federal Reserve. The all-time highs in prices for both of these metals are reflective of its global markets as well. In fact, silver has outperformed gold in not just the month of May, but in this year so far as well. Prices of the white metal are up by 33% in 2024 until now. Is silver now becoming the new gold for investors? We analyze the precious metal prices and demand trajectory with Philip Newman, Managing Director of Metal Focus, and Michael Renzio, President and CEO of the Silver Institute. Gentlemen, hi, thank you so much for joining us. And what a market. I'm sure both of you are busy watching prices and the kind of moves that the international markets really seem to be making on. Philip, the first question is to you. And with the gold prices at all-time highs, I mean, these are the targets that most Wall Street banks did put out, but they anticipated these prices by the end of this year or maybe next. With the kind of run-up that we are seeing in this space, first of all, who do you think is buying and at what volumes?
Well, first of all, thanks for having me on again, Manisha. Always good to be here. I think the buying we're seeing is coming from a number of sources. I think equally the selling that we're seeing is also very limited. I think investors aren't really willing to sort of bet against the market. So I think, we've seen in terms of institutional activity, be that in the US or in East Asia, I think that's certainly been part of this. For example, if you look on the CME, the rise in the longs has been interesting, but equally you have seen a small build up in net shorts, or sorry, rather gross shorts, but that's been very limited. I think the other area of buying is from the central banks. If you look at the figures that we reported to the World Gold Council for the first quarter, it was still exceptionally high as well. So I think the buying we're seeing has come from a number of different areas. And I think the final one that we're seeing is from high net worth investors, again, from a number of different areas across the world.
With the kind of price move that we are looking at, Philip, how are you looking at prices from here on? Does it look overbought, overstretched? Do you think that the retail buying, especially in India, could take a hit because of this?
Well, I think in India, we've certainly seen a pause in the past few days. And as you know, you've seen the price in rupee terms hitting record highs around sort of the $74,000 per 10 gram level. So I think it's understandable that buying will pause. The likes of the US and Germany, from a retail standpoint, they're still pretty weak. But when we think about the price, is it overextended? Possibly. I still think there's still room for a correction. Having said that, what we've seen over the past few months is just how well protected the downside has been. And any liquidations we've seen have certainly been very short-term in nature. And when we have seen prices dip, equally we've seen investors coming in, so those bargain opportunities coming into the market. So I think those lows have been quite well defended, and that also suggests that any weakness we may see is likely to be pretty short-lived. And especially, going to the second half of the year, if we do see a rate cut in the US, even if that's very, very few in nature, I think that would also encourage investors to come into the market as well.
Clearly. So, well, the gold prices, as Philip says, all declines are going to be short-lived. So buying opportunities is something that you need to keep looking at. Michael, this one is to you. And it's not just gold. Silver is outperformed in the last 1 month or so. So while it has a rub-off effect coming in from gold and copper on the other side, its own fundamentals itself are quite strong.
Yeah, thank you, Manisha, again for this opportunity. And hello, Philip. Silver is just really, really outperforming gold. It's almost neck and neck with copper and the base metals with respect to its performance in 2024. It broke $30 an ounce for the first time in decades. And that really is showing that there's strong demand on the investment side, on the industrial side. And as Philip mentioned, anticipation on fresh Fed rate cuts potentially coming later this year. We're also seeing a cooling of inflation data here in the United States, at least. And to add to that, we're predicting a consecutive year of market deficits. We believe that silver industrial demand will hit a new peak in 2024. And, we can't overlook the geopolitical tension that's taken place across the world. And you put on top of that all these elections that are taking place across the world, and especially here in the United States. How will that impact the gold and silver prices?
Clearly, there is a lot of safe haven buying coming in as well. This one is to you, Philip, and I want to talk about the geopolitics as well. And there's plenty happening within West Asia, Middle East as well, as it were. Do you see gold looking at a lot of safe haven buying? Central bank buying is something that you already alluded to. How much of buying are we seeing from within this part of the world?
Well, as Mike's already touched on in terms of what's going on in the Middle East and elsewhere, I think as an investor there are plenty of tail risks out there to suit your particular investment strategy. So I think that's certainly the case. And if you go back a month or so, particularly in the Middle East, what was going on in terms of Iran and Israel, that obviously quietened down, relatively speaking. But of course, over the weekend, that became the focus again, particularly in terms of Iran, obviously. So I think that is certainly out there. And again, if you're an investor, there are so many risks or potential risks to really encourage you to maintain, gold and silver in terms of your portfolio.
You talked about the industrial demand, Michael, and how do you and where do you see coming in from? Because while we look at Indian markets, the kind of imports that we've seen until now in the first quarter and add the month of April to it as well is much higher than where we were last year. I have been speaking to a lot of people in India and they tell us that 5.5 to 6,000 tons of imports in this year is what they are calculating. What is your sense?
Yeah, it's been quite amazing. We're seeing the same numbers, Manisha, and quite frankly, this is primarily due to green energy programs that are ongoing in India. China, of course, is the leader with respect to photovoltaic installations. Quite frankly, PV and silver go hand in hand. And what we're seeing last year, we saw an enormous increase. I believe it was 60%. In silver's demand for photovoltaics. That was globally. And we think this year is going to be strong as well. And India is going to help China pave that way.
Michael, so, in sense of prices then, and $32 an ounce was a faraway target, if anything, and we're sitting on that right now. What is your sense on where our silver price is headed?
Well, look at the silver price. In relation to gold, silver can be much more volatile than the gold price. But the speed with which the gold-silver ratio has decreased has been quite dramatic. I mean, we're looking at 76.3, I believe, the ratio, gold-silver ratio. And while this may suggest that silver is susceptible to a correction, we feel to the contrary. We feel that there may be some small decrease in the price, but we think that the table has been set for a rather dramatic 2024. And it's not just on the industrial demand side, but on the price side, more to your question, we're seeing strong retail demand. We're seeing talk of another silver squeeze in the online communities. And we're also seeing that the ETFs are growing. The 5 major ETFs are up 20% this year. So when you look at both gold and silver, on the silver side, silver is clearly outperforming gold. And we think that we haven't even reached the halfway mark yet.
All right, we haven't reached the halfway mark yet. So clearly, very, very bullish cues coming in case of silver there. Philip, this one is to another phenomena really is about de-dollarization. I mean, India, of course, is sitting very heavy on dollar as a reserve, but we also have been adding gold. China has been buying a lot, Russia on the other side, Turkey, Kazakhstan. A lot of these countries are buying a lot of gold for their reserves, the central bank buying that is. How do you see that, one? And do you think de-dollarization on ground is actually happening, even if slow?
I mean, I think you hit the nail on the head there, Manisha. So from a central bank standpoint, the gradual shift in terms of the de-dollarization has been something that's been happening for many, many years. It's something we talk about in our annual gold focus, for example. I think there was certainly an acceleration in that trend after Russia's invasion of Ukraine. And so we've certainly seen that from an increasing number of countries. So I think that's certainly one of the factors encouraging the central banks to buy. The figure, as I mentioned, for Q1 was exceptionally high. On a net basis, it was around the 300-ton mark. So historically, very, very high. Will it continue at that level? It's exceptionally hard to say. But from our point of view, central banks will, firmly remain on the demand side this year. We've had record buying, the past year or so. So even if it doesn't hit the 23 or 22 levels, in absolute terms, it will still be a very healthy figure. And, I think the de-dollarization is something that will certainly underpin much of that.
Philip, various reports and, surveys suggest that you could be looking at 2,500 and 2,700 and 3,000. And I've heard levels of 3,200 as well possible for this year itself. Any sense that you see in all of these numbers?
Well, I think if we go back to the beginning of the year, and we'll be the first to hold our hands up, that, if we were talking about levels sustained around the $2,300 or $2,400 level, that certainly is something we didn't see happening. Or if we did see that perhaps that price would be overextended and it would quickly correct. Clearly, that's not the case. And as I mentioned earlier, just how well the current levels, any selling off, that downside is so well protected. Is 2,500 possible this year? It certainly seems on the card. The way that the markets reacted to perhaps news that the Fed may adopt a slightly more dovish stance. So I think the markets, investors in particular, are looking at stories that are gold positive and are running with those. That sentiment is certainly fixated or is fixed on, further upside. So I think 2,500 by year end or into early 2025 is certainly a possibility. Beyond that, I think, I would have to say that I'm still pretty skeptical. But I think, frankly, if we get to 2,500, that will still be, exceptionally high. Bear in mind that the Q1 average was, over $2,000. That's an exceptional average, just for a 3-month period.
It is. And what a run-up is what we've seen in gold and silver. It's always a pleasure having both of you together. Thank you so much, Michael and Philip, for joining us today. And we're wishing you a very happy weekend going forward. And of course, we've noted down all of those numbers and fundamentals that you've just told us. Thank you. Appreciate your time. And with that, we're heading into a short break. But coming up, we shift the focus on silver prices and the gold prices within the Indian market with Kishore Runwal, Managing Director of Anmol Jewelers, and Ashish Pethe, partner at Vaman Haripad.